Good afternoon, good morning, and welcome to everybody joining us here today. FirstBest and MajescoMastek are excited to be presenting this webinar titled Pursuing Profitability. Thanks for joining us. My name is Mayura Primes with FirstBest, and I'll be hosting and moderating the webinar today. Before we begin, though, let me just review a few housekeeping items with you. If you have any technical difficulties at all during this presentation, please call customer support at 781-863-6038. If you'd like to ask questions during this webinar, please use the Q&A feature on the top left-hand corner of your live meeting console. You may ask questions anytime throughout the webinar, and we will have a Q&A session at the end to address them. Now let's begin. Today we're going to talk about a number of challenges facing insurance carriers today that are impacting profitability, sometimes significantly. We're also going to talk about several effective strategies carriers can use to improve profitability in this difficult market. Joining me, I have Anil Chitale, the practice leader, property and casualty for MajescoMastek. Welcome, Anil.
Good afternoon, Lisa. Good afternoon, Mayra, and good afternoon, everybody. And thank you for joining this webinar today.
Thank you. Anil is the head of product development at MajescoMastek's P&C division. He was co-founder of STG and was a principal architect of the STG suite of products. Anil has played a variety of roles over the last 18 years in areas of product development, business development, strategic initiatives, and client services. Currently, he's responsible for enhancing the STG product suite, keeping it in step with industry and technology changes, and growing its acceptance in the U.S. and global industry. I also have John Belizaire with me, CEO and founder of FirstBest. Hi, John.
Hey, Mayura. Thanks, everyone, for joining. Pleasure to be here.
John is an accomplished enterprise software entrepreneur with a track record of new venture development and management success. Prior to co-founding FirstBest, he was Senior Director of Business Development and Strategic Planning for BEA's e-commerce application division, where he grew annual revenue to over $150 million. Before BEA, John co-founded the Theory Center, a leader in Java-based component software for enterprise applications. As CEO, he grew the company from inception to $10 million in revenue. BEA Systems acquired the company in 1999 for over $160 million. Welcome, gentlemen. As some of you may know, the two companies announced an alliance last year to help P&C carriers improve underwriting operations. So before we start talking about challenges and strategies today, I thought it might make sense to ask John and Anil to share what the impetus was for this partnership. Anil, why did you decide to partner with FirstBest?
Well, Mayra, thank you for asking that question. There's a couple of reasons that I would like to cite today. First of all, as some of you may be aware, MajescoMastek has been providing P&C solutions for over 15 years now. And over these years, we have done several implementations where we have delivered solutions, primarily back office systems. And we've also done some work in the area of straight processing and personal lines. However, when it came to commercial lines, we realized that our customers, as well as the broader market, had an unfulfilled need, particularly as it related to completely automating as well as enhancing the underwriting process. We looked at what was out there, and when we came across what FirstBest had to offer, we felt it was a great fit to add to our portfolio and offer it to our existing customers as well as the broader market. Additionally, as you all know, MajescoMastek also has a deep expertise in the insurance domain, but also is known to have a very successful track record with large, complex projects. As we introduce best-of-breed solutions into the market, integration is a very key component of any project success. And we felt that we can offer some of our expertise in managing large, complex projects in these kind of engagements. So those are the two primary reasons why we felt an alliance with FirstBest makes perfect sense.
Thank you, Anil. John, how about you? Why MajescoMastek?
Sure, Mayra, thanks. I want to echo what Anil said. As you know, we provide commercial P&C solutions that help carriers greatly enhance their underwriting operations and also provide a unique collaborative experience to their agents and brokers to help make their carrier the carrier of choice. And in delivering this value, we typically integrate with carrier core systems and policy admin and rating systems. And we needed a partner that brought deep insurance domain expertise, much like Anil talked about, that delivers expertise that would help us deliver this extended value in really two ways. The first would be to help us to connect our solution to legacy policy admin systems and rating systems. And then the second would be to help us bring new flexible core systems to bear in our implementation. And Majesco delivers both of these with their global capability and their comprehensive suite. So our partnership is truly synergistic.
Thanks, John. Now let's move on to our main topic. The insurance industry is dealing with many challenges today. Right now we're going to focus on 4 key challenges that many say together form a perfect storm, or at least a rather stormy business environment. The 4 challenges we're going to talk about today include the continued weak economy, premium erosion, underwriting losses, and return on capital. Now let's start with the weak economy. While showing some small signs of hope, our economy is still nowhere near a real recovery. Employment rates, housing starts, and car sales continue to point to less than optimistic signs for 2010 as well. But starting with unemployment, the rate's currently north of 9%. Between the bad economy, this unemployment, significant payroll reductions, all of this only helped to accelerate the decline in demand for commercial insurance markets. There's also trouble still in the housing starts. Housing starts were down 72% from 2007. This drop obviously has affected and continues to affect home insurers and insurers with books of business serving the construction, contracting, and home supply industries. Even car sales, they dropped 39% in 2009 as compared to 2005, even with the wildly successful Cash for Clunkers program. And according to Edmunds, it may still be too soon to tell the extent of the impact that the Toyota recall may have. Now let's look at premium growth, which typically is an engine for insurance company profitability. Unfortunately, it's been falling for the last 3 years. And according to AM Best, net written premiums fell at least 4.8% to $325 billion in the first 9 months of 2009. This marks the first time in AM Best recorded history that premiums have declined in 3 consecutive years. And all signs are pointing to 2010 looking similar, with no signs of real hardening until 2011. So insurance companies' top lines will continue to be under significant pressure from all of these economic impacts, and ultimately and negatively influencing bottom line results as well. Third, underwriting losses continue to pile up as well, with a total of $21.3 billion recorded in 2009. And this is according to ISO and the Property and Casualty Insurers Association of America. Finally, return on invested capital is nothing to write home about. At only 4.5%, the implications are both profound and immediate, because there seems to be no sign of a reversal in these trends. In summary, these 4 key challenges come together to create a rather stormy environment for many insurers. It also creates what we like to call a profit imperative. So the questions I think that we need to continue to ask ourselves as an industry are, what can we do in our insurance operations to find profit this year? What are we going to do differently, and where do we invest? Now I'd like to turn to our guest speakers, John and Anil, and get their thoughts on winning strategies carriers like you can use to find profit in 2010. John, what do you think carriers can do to drive profit in their insurance operations?
Well, thanks, Mira. I think that was a great summary of this fairly difficult environment. From what we've seen, the forward-looking carriers that we're talking to and working with, they all point to improved underwriting efficiency as their main focus for driving profit. In fact, I think that's probably akin to finding a needle in the haystack. But if you look at the folks that are talking about this stuff in the marketplace, You'll see that a number of the leading publications are certainly pointing to underwriting efficiency and areas like that. In fact, if you look at some of the leading ones, they're all sort of looking at underwriting efficiency as a new profit frontier. Insurance World's blog talked about carriers' realization that technology investments for generating operational leverage are going to be important. AM Best is certainly talking about underwriting discipline and expense management. And National Underwriter is weighing in around carriers' need to focus on improving efficiency and their business processes. But I think the discipline and efficiency that these folks are talking about is part of a broader strategy. Namely, in my opinion, I think the real strategy should be focused on bringing in and winning profitable new business. And the challenge is developing a very detailed approach to achieving this goal. Through our experience with our customers and our reach in the market, we put together a winning 4-part strategy we think will help carriers succeed in this continuing but tough market. This winning strategy has 4 components, as I talked about. We like to affectionately call it AKPI. The A refers to automation, so automate everywhere that you can and as much as possible to drive efficiency. Knowledge management, try to find ways to institutionalize the knowledge and best practice of your best underwriters to drive discipline. Predictive analytics, whether you know or don't know about this technology, it is a fast emerging capability that helps carriers bring more improvements in risk selection and segmentation and pricing. And then finally, integration, the I in our KPI. The best way to think about that is the more time your underwriters can spend analyzing risk versus running after that data and papers, the better they will be. So focus on creating a one-stop shop for managing the underwriting process. That's AKPI, our 4-part strategy.
Thanks, John. Cool acronym. So A for automation, K for knowledge management, P for predictive analytics, and I for integration. What I'm hearing is that while each of these strategies can stand on their own and help improve an insurer's efficiencies, working together, their value is much greater than just the sum of the parts. Can you elaborate for us, please, on how exactly a carrier might implement these strategies?
Absolutely. I think your point about them working together is an important point. The reason we call it a 4-part strategy is they do need to work together. You can implement each one of these things, but the 4 together is way more powerful. So let's start with the first part, automation. I talked about automating wherever possible. If you look at, again, some studies out there, Bill Keneally from INN talked about a study that came out from Ivans, where many insurance organizations were looking to grow organically through existing lines of business and wanted to push automation further along in the customer management lifecycle so they can respond more quickly to the needs and opportunities of customers. In fact, the survey quizzed about 68 insurance carriers from different lines of business. They found about 82% of those respondents building up existing lines, and while the remaining 42 or so were seeking to do so through diversification. I think as the industry is still entrenched in the soft market, these numbers reveal a real focus on efficiency and automation. And the technology infrastructure that insurances are examining right now are really looking to go beyond traditional ways of cost-cutting like downsizing. They're really focusing on transforming their business, eliminating redundancies through automation, and streamlining those transactions through some standardized workflow. So the question is, what should you do, our audience here? In my view, you should focus on any automation that can help you drive your appetite rules to the front end of the process and use those rules to automate the risk screening process. You should definitely invest in collaborative technologies. These are becoming very popular right now, and using these real-time capabilities to enable faster turnaround to agencies. So a 30-second question is a 30-second question. Really automating the delivery of third-party data and reports to underwriters' desktops is going to be a fantastic investment in automation. Straight-through processing. We've probably heard a lot of talk about STP in the past, but the thing that we're seeing right now is a huge investment in STP when it makes sense, and most of the time we think it makes sense is for processing small risks. And then finally, reducing manual data entry. If your underwriters are keying into multiple systems or your producers are keying in multiple times to get your submissions in, that's bad. So look at automating that area to reduce the entry for both your producers and your underwriting staff. Let's talk about knowledge management, the K&A KPI. I'm not talking about the sort of traditional expert systems that were popular back in the 80s, perhaps. I'm really focusing on capturing best practices of underwriters to drive discipline. Now, this is a real problem. Deloitte talked about, in a report they did around the industry in this area, the need for the industry to hire and develop about 25,000 new underwriters alone between 2004 and 2014. So needless to say, we're well into that prediction. Many insurance companies in particular could face some critical talent deficiencies in the next few years. About 88% of CPCU members are age 40 or older. And the number of insurance workers is over these ages is certainly growing and so forth. And so there's a lot going on. And the insurance industry is certainly at a crossroads between unlocking the best practices of their seasoned underwriters and really recruiting and training this new generation of Gen Y workers that are going to be coming in. So fortunately, there's a way to solve both of these problems. The first challenge, of course, is to save the information and expertise before it evaporates. The second is to attract and train and retain these new knowledge workers by creating the right environment and providing the tools they need to, and they might expect. These folks are using some pretty advanced tools at home and in some of their other industries. And so when they come to this industry, they're going to need to have some advanced tools. So some ideas. Number one, share some best practices among your teams, your underwriting teams, and use that to teach and disseminate these new generation of underwriters. As much as you can systemize that sharing in some collaborative platform, that becomes very powerful. The second, leverage the best practices of your underwriters to drive discipline and enforce compliance. So use your business rules and those best practices to create a guided workflow process that the underwriter really has to stay within, which will ensure that discipline. Letters of authority. These things have been traditionally paper-based processes. We really want to see those things digitized now and used as a way to enhance the discipline in the process and really enforce those letters of authority inside of your one-stop shop system. And then finally, measure the effectiveness of your underwriters. Find ways to improve the process and use those improvement methodologies among your team. So let's talk about predictive analytics next. Essentially, the focus there is using models to better drive risk selection and precision pricing, as I talked about. Now, predictive analytics is a real thing. It's fast becoming the leading way to improve or better risk-based pricing accuracy and improve loss ratios. In fact, National Underwriter talked about the utilization of analytical tools and the fact that they are typically being used now in a logical way to enhance underwriting expertise. In fact, act as an aid to the underwriting process. Tech Decisions talks about insurers, really being excited about predictive analytics in a variety of ways that it can be used. In fact, it was once thought to be the domain of reinsurers looking to avoid cat risk and so forth. But the analytics and folks in that space have found that it's really winding its way around the enterprise. In fact, one last point. One of our partners, Valent Technologies, is a leader in predictive analytics, and they've helped a $500 million workers' comp carrier improve their loss ratio by 6 points. You heard me, 6 points. That's pretty impressive. So the question here is, how do you best integrate predictive analytics into the underwriting process? So here are some ideas. Use the models up front in the underwriting process to provide decision support for schedule, rating, and pricing. So your underwriters get that model data at their fingertips and use that in that rating and pricing process. The next, use the analytics in conjunction with automation to drive straight-through processing. You might even use the model to actually drive the STP engine if you could. And then finally, collect data in the underwriting process wherever possible as a way to enhance the model. The more the model incorporates the true data and experience that you have, the more powerful it will become and get you closer to getting those pretty fantastic results on the loss ratios. All right, let's talk about integration, the I in our AKPI strategy, and the last component of our four-part strategy. The idea here is to create a one-stop shop for underwriting information, workflow, data. Just about everything that's happening in the process should flow through one central location, or one system, if you will. The complexities of making technology connections between new front ends and legacy systems should not be underestimated. In fact, Kevin Harris, the CIO of ICW, talked about their underwriting transformation project, and Kevin talked about how his system was a mainframe, COBOL-based, and it's been carefully nurtured over 25 years, and there's a lot of knowledge embedded in these systems. I bet some of our participants have equally legacy environments that are similar. And Kevin talked about a lot about the fact that there's not only a tremendous amount of business knowledge, but there's a lot of tribal knowledge that's stored in these things. And we had to find a way to extract that knowledge, visit the rules in those systems, and put them right in front where the underwriting process is taking place, and unwind what he called a bowl of spaghetti. I mean, if you put it in that context, it's pretty complex and sounds like a daunting process. But what should you do? So this is the best approach to integration. Number one, make all data and information accessible from one place. I talked about this concept of delivering data to the underwriter's desktop, deliver any other third-party data to the underwriter's desktop. Systems, claims, anything you can deliver to the desktop is going to power the process. The next piece is don't have your desktop be separate from your other core systems. In fact, integrating the underwriting desktop with policy admin and your other powerful core systems actually creates a next generation or powerful platform for driving your efficiency and driving net gain in underwriting. Next, reduce duplicate data entry. If you drive a one-stop shop, design the architecture so there's as minimal reduction or minimal duplication of data entry as possible. So make it once and done. And then finally, enable your policyholders and producers to make routine inquiries and non-premium bearing changes, which happen after closing the new business. So through that one-stop shop, that should happen as well. That's my view, AKPI. I'm sticking to it. Yeah.
Thanks, John. Great insight around this four-part strategy. Now, in the interest of ensuring that the session is also interactive, we're going to pause here and put up a polling question. We'll give you 30 seconds to answer, and then we'll tabulate and share the results. Which of these four strategies would you like to gain benefit from first? Please start responding, and the answers will come up. Okay. We'll give it 2 more seconds. And here are the results. 42% of you have ranked as first place, creating a one-stop shop for underwriting information and workflow, with automation coming in second place. Actually, very interesting results. And what I'm going to ask John to do now is let's look at a customer case study. Let's see what the customer has focused on and the results that they've actually experienced and how that relates to your answers. John, can you please share a customer example with us?
Sure, Mayor. One of my favorites is ICW, of course. I was alluding to Kevin Harris, their CIO, earlier. Back in 2006, they were one company, one forward-looking company that had the foresight to implement the strategy similar to AKPI, and they are thriving in this market. But let me tell you, when we met them in 2006, they were dealing with a number of challenges.
I think the picture looked a little different, John.
Yeah, absolutely. ICW wasn't providing the level of service they wanted for their agencies. They couldn't hire and train the underwriting staff fast enough to manage the projected growth in their business. There were certainly a number of internal inefficiencies that limited their scalability. The underwriting department was swamped during some of their peak periods, and we've already heard about the pretty spaghetti-like legacy systems that they had that delivered a huge lack in flexibility. And the underwriters were rekeying into more than 4 systems to complete a quote. I can go on, but in Kevin Pryor's perspective, their CEO, they certainly needed a transformation. ICW used the AKPI approach to develop a one-stop shop, an underwriting workstation coupled with a rich agent portal to provide new business and renewals. That was their realization of their AKPI strategy. I just want to give you some highlights on how each of the components were implemented. On the automation side, they focused the use of automation to drive scale by enforcing business rules, and they use straight-through processing pretty heavily. Small risks are straight-through process, as I talked about, and all data is delivered seamlessly to their underwriters. ICW is a commercial insurance carrier, and lots of data is involved in the complex risks that they write, and so getting that data to the underwriters was important. And referrals are now completely automated. The head of underwriting can drive and manage referrals just about anywhere he is. The K, knowledge management, they did focus on enforcing underwriting authority. They have digitized their letters of authority, and they've incorporated the letter of authority into the referral process. So if someone exceeds their authority, referrals are automatically required and processed using the system. Underwriting guidelines are also digitized and enforced during the process. So that's what I talked about, those best practices. They actually went through the process of sharing them and also focus on automating those. They are using modeling. They've actually developed a way to deliver modeling capabilities right to the underwriter's fingertips as a decision support tool. The modeling was really focused on getting their underwriters to spend less time getting data and really focusing on analyzing it. So the model does some of the analysis for them, but it's really a decision support tool. And then integration. They did unravel the bowl of spaghetti. They've completely integrated their policy administration, rating, modeling, and a number of data services systems into this one-stop shop. So, needless to say, they are thriving as a result of this stuff. They're differentiating themselves with fast service. They've streamlined the process without sacrificing underwriting quality. They have complete visibility over the process. They're able to manage their risk, and they're much faster and more flexible. And I think more importantly, they've been able to empower their underwriters now because they have, found a tremendous amount more time to do this, to build relationships with their agencies.
And I really like this picture and the type of business environment that it represents.
Absolutely, absolutely. Now, they, as I said, they're thriving. Well, let's put that thriving down to numbers. Within a year of implementing their AKPI strategy, not only did they enhance their underwriting, as we discussed, but they achieved some incredible results. They now can do 51% more submissions, 71% more quotes, 47% reduction in their policy processing time, and then, they can close 34% more business. And I think in summary, they're writing more business, higher quality business at the right price. What more can you ask for?
That's great. How do I get some of those?
Give me a call. I'll take care of it.
Okay. Thank you very much, John. So John's told us quite a lot about what type of strategies to implement that drive profitability by bringing in and closing new and desirable business. Let's turn to Anil now. Anil, what else can a carrier do to drive profit in their insurance operations this year?
Sure, Mira. Let me just, thank John for outlining a really great strategy for improving the efficiencies of the underwriting process, as well as qualitatively improving the type of business that you could get into the door. I just wanted to offer a simple complementary strategy that carriers can focus on, since the topic of our discussion is profitability, and as well as we're going to a soft market. I believe that key element or key other complementary strategy to improving profits is really focusing on retention. I think implementing solutions that are going to allow you to make the underwriting process efficient and bring in desirable business into the door is definitely necessary, but it does not translate into profits unless and until you've thought about how you're going to retain that business. In other words, those written premiums cannot translate into paid premiums if you cannot retain that business and renew it year after year. So I feel the carriers need to focus on retention as well, in addition to acquiring desirable business. And some of the elements of John's strategy, the automation, the integration, the knowledge management, all of that still apply to the process of improving your retention as well. So there's definitely those elements are common. But I think what's different about retention is much of the retention can really be achieved by focusing on some of your back office systems. A lot often, we've noticed carriers have environment where the ability to, there have been investments made in their ability to acquire business, but the back-end systems or the back office systems are not really either efficient, straight through, they're not integrated, there are multiple systems out there. I think there's a lot of room for improving there, which can have a direct impact on the retention. Mira, if you don't mind, I would like you to move to the next slide. For some reason, I'm unable to access the presentation from here.
Sure, no problem. Is that okay?
Yeah, that's good. So as you all know, the cost of underwriting renewal business is significantly lower than that of acquiring new business. And it's kind of a cycle that will lead to improved retention. As your underwriting cost if you retain more business, your cost of underwriting for that business goes down, which in turn results into lower underwriting expenses. That will lead to you being able to offer some competitive pricing, which again feeds to the retention of the business. So once you acquire desirable business through whatever elements of the AKPI strategy that you apply, if you invest in your back-end systems, the back office systems, to integrate them with the underwriting management systems, you can really achieve some phenomenal results in terms of getting retention to where it needs to be, and that will really allow you to translate the business the desirable business into profits. So what that really means is in addition to investing in the process of improving the efficiencies of the underwriting process, there's also a need to focus on investment in the back office systems, and those should really be targeted towards achieving speed of issuance, accuracy in processing, and servicing excellence. I believe that there are definitely a number of strategies that one can employ to improve retention, but these are very critical in my view because these are often neglected. The speed of issuance really relates to how quickly you can get your policies out of the door. You can write desirable and good business, but if you're not able to get that out of the door soon enough, fast enough, eventually it's going to result into loss of that business. The same applies to some of the other areas such as accuracy in processing. The effectiveness of your back office systems is really going to contribute in a big way in terms of what goes out to the door to your insureds and your agents, whether they be bills and notices, renewal questionnaires. All of that really depends upon how effective your back-end systems are. You've got desirable business, but if your back-end systems are not in a position to accurately process them, it is going to eventually result into losing that book of business, that desirable business, and lower retention would eventually mean you're not really benefiting from the profits that you need to have from the desirable business.
Thanks, Anil.
Go ahead, Mira.
Okay, so let me repeat that. Speed, accuracy, and service, 3 key components of a successful retention strategy. Do you think you can give us some more detail now on how a carrier can leverage these 3 components to improve their overall retention?
Absolutely. Let's take them one by one. If we look at speed, I mentioned earlier that reducing the cycle time is really the key to that. You can get desirable business into the door, but if you do not have your back office systems tightly integrated with them, you are not going to be able to get the policy out of the door or whether there are changes to the policy. So as much as possible, you need to bring in straight-through processing by integrating these systems together and reduce the cycle time that it takes to get business out to the door, or policies out to the door. The same thing applies to automation of renewal process. Again, the knowledge management aspect of the AKPI strategy that John mentioned plays in here. A lot of the knowledge that's embedded in the systems can be re-leveraged here at time of renewal, but automating the renewal process can really help you lower the underwriting expenses of the book of business, and that can eventually translate into not just retention but also profits. And the other area to focus on would be manual workflows. John mentioned about enabling self-service channels for both the agents and in some cases other distribution channels that you may have, such as dealerships and things like that. So if you reduce the manual paper-based workflows and allow self-service options to your distribution channel, that will eventually translate into achieving some speed in terms of how you get your business processed and policies out to the door. So that's a very important component. There are several others. I just wanted to touch upon these three here. Let's move on to accuracy. Accuracy again, it stems from duplicate data entry that is often prevalent when you go through getting your best of breed systems. Well, the carriers today have a lot of options in terms of choosing best of breed systems, whether they be in the area of underwriting management, policy processing, billing, cash management, claims. Integration is a very key component. If you cannot get these systems integrated well, it's going to result into some duplicate data entry, as well as quality of data that flows through these systems, and eventually it's going to result into your customers getting impacted, which is going to show its impact on the retention of the business. The other point I wanted to make was about back office functions such as premium accounting, billing, collections. Traditionally have all been products. Sometimes multiple systems that are used to do the same back office functions because either carriers acquired multiple systems, some of these systems are buried inside other policy processing systems. So there's an opportunity to kind of consolidate some of these back office functions such as premium accounting, billing, and collections across product lines and across underwriting companies into some of the modern systems that are available today. The third really component is, by deploying some very effective systems in the area of invoicing and payment processing, you can really cut down the number of customer service calls that you could be getting. A majority of the customer service calls are either invoicing or payment related, and if those systems are streamlined and effective investments are made in that area, you could have you could reduce the number of calls that you will be getting and related to invoicing payments, and so that's going to eventually translate into retention. Finally, I would highly recommend that carriers focus on making service as a differentiator, and that can really be again achieved by employing some very customer-centric tools as opposed to product-centric tools. Many of the systems that are available to CSRs in their carrier environments are very product-centric. That means they have system A for processing a product A, another system to go into to get information about a product B, and so on. But there are now options available where some of the common functions that a CSR carries out can be done across product lines. And so, you can benefit from deploying some of those customer-centric tools to improve the quality of service that you could offer to your agents and your insureds. Again, multiple billing and payment options is another way to, delight your customers. We talked about self-service options. Electronic bill payment and presentment is another area. So there's a number of ways where you could make service as a differentiator and thereby contribute to improving your retention and translate to your underwriting into profits. Mira?
Thank you, Anil. That was extremely informative. At this point, we'd like to do one more audience polling question now. Here's the question, and again, we'll give you 30 seconds to answer, and then we'll tabulate the results. We've talked about improving two parts of an insurer's overall business strategy, new business acquisition and business retention. In 2010, which of these two strategies will be your primary focus? Couple more seconds. Okay, well, I see that 75% of you are trying to pursue both strategies equally, which makes a lot of sense, and we're glad you're on this call today. At this point in time, let me just go back to the presentation. And Anil, I'd like to ask if you can share any type of interesting customer results with us today.
Sure, Mira. I'll take, in the interest of time, just two quick examples. We've had mid-size specialty insurer, which typically took anywhere from 10 to 15 days to get a policy out to the door. They were able to write business, but getting a policy out of the door or a policy change out of the door could take anywhere from 10 to 15 days because of the multiplicity of the systems, the integration not being there, duplicate data entry, and all sorts of issues that they had. And by basically deploying some solutions from MajescoMastek that allowed them to streamline these processes, integrate them, we were able to reduce the cycle time for getting these policies to near real time, in some cases very next day, in most cases real time. And it eventually translated into the retention of the business going up by 20%. A lot often customers left them because they just waited for too long to get a policy in their hands. So this was one example where retention was improved by streamlining some of the back-end systems and integrating them tightly. Another example is where the renewal process was a candidate where the carrier focused on, and by basically streamlining the process around the renewal processing, they were able to reduce it to a very efficient process, which was just required 3 touch points as opposed to about 12 to 15 touch points, and the renewal process, which used to take 5 to 7 days, was brought down to be able to handle that within a day. So those are two examples where the power of some of the systems, the back office systems, can really help you in terms of improving retention as well as improving the profitability.
Thank you, Anil and John, for very insightful and informative comments and for sharing your perspectives about the types of strategies we can leverage today to improve profitability and efficiencies in a tough market. At this time, we'd like to move on to the question and answer part of the session. We've had several questions come in so far, but please feel free to continue asking questions. As a reminder, you can utilize the Q&A feature on the top left corner of your live meeting console. Now, let's take the first question. Anil, here's one for you. What are some of the things in a modern policy admin system that can help carriers be seen as easy to do business with?
Certainly, there's a variety of ways I can respond to that question. Modern policy systems definitely, bring you the usability aspect of it. First of all, is a key component of some of the modern systems. Integration with third-party systems is another area. Integration with best-of-breed back office systems such as billing and cash management is another attribute that you can find in some of the modern systems. Those are some that I can think of. Again, automated renewals, very powerful features, some of the systems that can be leveraged very effectively by carriers. The other area that you will have benefits in terms of modern policy system deployment is some of the self-service capabilities that you will have for your agents as well as for your customers.
Thanks, Anil. Actually, I have a follow-up question to that. How do you build a case for replacing policy admin systems in today's market?
Well, you see, I understand that it's a tough decision to make an investment in, replacing a policy administration in today's days. But you really need to look at it in terms of the impact that it's going to have in your business agility, your ability to respond to opportunities out there in the market, improving the effectiveness of underwriting and how you can, profit from that. Increase productivity as well as superior customer service experience. I think that's a very key component that you should factor in making a case for a modern policy administration system, because as I mentioned, retention in the soft market is a key strategy to deploy, and your customer experience is largely going to drive how much business you're going to be able to retain. Obviously, there are the other ones, such as the cost savings that you could achieve over a period of time, as well as reducing some of the risks that you may have with respect to your aging platforms, aging workforce, and so on.
Thanks, Anil. And please let me remind everybody to feel free to continue asking questions until the end of the session. If we don't answer your question, we'll follow up with you after the webinar, but please feel free to continue asking. John, here's one for you. Using a FirstBest system, will carriers have better visibility into business metrics such as time to quote or hit ratios?
Absolutely. I mean, I alluded it to earlier. When you're looking at implementing this AKPI strategy in the systems that you deploy, in let's say in our system or others like ours, you really want to look for the ability to track underwriting effectiveness, record the process, and really generate reports and maybe even deliver a dashboard to the management function that's driving the operation to in real time see what's happening in underwriting. I mean, I didn't talk about visibility. I could have added maybe another letter in my strategy, but 4 letters is better than 5. But visibility is definitely important in the process, and the solution certainly we provide that's at the heart of that.
Great, thank you. Anil, I have another one for you. You spoke about billing and account receivable for improving customer service. Can you elaborate on that, please? Anil?
Yes, I'm sorry, Mara. I was on mute there.
Okay.
Yes, definitely. I'll answer that question. Studies indicate that many carriers have an average of anywhere from 2 to 3 billing systems within their shop. In some cases, it's even more. And there's a lot of duplicity in terms of functionality and processing capabilities that they have. So the first and foremost benefit that you could derive from deploying a modern billing and cash management system is consolidating all of these into one single system across product lines, across underwriting companies. Many times these can be the first area of focus before replacing even a policy administration system. The other thing is really a very unified customer view. That's something that a good billing and cash management system can allow you to have as a benefit. Is really you can get a single customer view across all their policies, across all their different accounts that they may have. Self-service capability, again, I cannot not mention that. Both to your agents as well as to your policyholders, online payments capabilities, ability for agents to be able to review and receive their commission statements online. Obviously, financial reporting and controls, some streamlined workflow advantages that you can get. But more importantly, also, you could get the benefits of integrating your billing and more modern billing and cash management system with your existing legacy applications and begin to get ROI from that sooner than a typical strategy where replacement of a policy administration system could be a multi-year project. So I think those are some of the things that I wanted to highlight.
Oh, thank you very much, Anil. John, somebody from the audience would like to know if agents like the FirstBest system, or is it just the carriers?
That's a good question. Agents love it as well. When you're doing the automation and delivering some of the, one of the points I made around automation, if you remember, was bringing in some collaboration components. Well, you can't collaborate unless you have multiple participants, and in our system, the agents are part of that process, and that's probably the biggest thing that they enjoy in the system. They like the fact that they can connect to an individual underwriter as they submit business and process that business through that relationship. As I alluded to earlier, a 30-second question is a 30-second question when you can chat and share screens and move documents through a collaborative platform like what we offer, and hope that other providers like us would provide as well. So yes, they're big fans of the system. We focus on providing a very intuitive interface and experience for the agents, and so that builds affinity as well. So yeah, I would say agents are fans.
That's great. Here's another one for you. Does the FirstBest solution help facilitate the use of predictive analytics, and if so, how? How does that work?
Yeah, that's a good question. Well, there's a couple of ways to look at it. I mean, if you have your own models, what most of the carriers we talk to are looking to do is to plug those models into this one-stop shop or this execution environment we've been talking about, and really have it serve as a decision support tool. In our solution, we allow you to deploy the model that way, so that you can automatically pull data from the submissions and other sources that can feed the model, and then through a set of rules and a visual system, we can tell you information about what the model is saying and direct the underwriter to do certain things. In fact, we might even make that direction a suggestion, or we could make that direction an enforceable act that they have to do. The second way that we integrate with the models through the technology that we have is to allow you to run the model in almost a black box fashion, so that you can process the business, maybe some of your small risks. For instance, you can fire off some rules and move the risk through a series of workflow steps before the underwriter even sees it, or you might even use it to communicate your risk appetite. Multiple different ways you can use the model, but I guess the answer to the question is yes, we like integrating the models. We know exactly how to do them, and there are a few really cool ways to do that in our system, and some others out there as well.
Thank you very much, John. I think that's about all the time we have today. If there are questions that we haven't gotten to, we will follow up with you. Please feel free to use the contact information available on the screen to contact FirstBest or MajescoMastek with any questions, or if you'd like news or demos or anything like that. An email with a link to the recording is going to be sent out to you soon, so you can review the presentation or share it with others. I wanted to take this opportunity to thank everybody who joined us today. Thank you very much for participating. And thank you to our guest speakers, Anil and John. That was great.
Welcome.
Thanks again for everyone that participated. The webinar is now over. Have a fantastic day.